Hey guys, in this video, we're going to talk about whether Netflix's recent announcement to increase its subscription price is good or bad for the Netflix stock price. If you're a holder of the Netflix stock, should you be happy that Netflix is charging its customers a higher price? First, a little bit of background for everybody. Netflix announced last week that it's raising prices for all three of its subscription plans by $1 to $2. The cheapest $7.99 basic plan will now go up to $8.99. The $10.99 standard plan will go up to $12.99, and the $13.99 premium plan will go up to $15.99. These $1 to $2 increase per month might not seem much in absolute dollar terms, but it has a huge impact on Netflix revenue when you look at it on a percentage basis. The basic plan is basically increasing by 12.5%, the standard plan by 18.2%, and the premium plan by 14.3%. So essentially, Netflix is raising prices by 12 to 18%. Now, how does this affect the stock price? If you follow the courses on our Lumovest website, you'll know that the stock price is driven by how much profit the business earns. Profit is a function of revenue less cost, so the greater the revenue, the greater the profit. And revenue is a function of price and volume. So does the 12 to 18% increase in price translate to 12 to 18% increase in additional revenue for Netflix? Not quite, because with a higher price, Netflix might not attract over as many new subscribers as they would with a lower price. And some investors would argue that some people could cancel their Netflix plans due to the higher price. Therefore, the 12 to 18% subscription price hike would increase revenue and profit if and only if it doesn't result in an 11 to 15% loss in volume growth, meaning that if Netflix doesn't lose 11 to 15% of the subscribers that it otherwise would have gained without the price increase, then the 12 to 18% increase in subscription price is a win for revenue and a win for profits. Here's an investment analysis challenge for you. See if you can figure out why it only takes 11 to 15% loss in volume growth to offset 12 to 18% increase in subscription price. Let us know in the comments. So whether the price hike is good or bad for Netflix stock can be simplified into whether the 12 to 18% price increase would result in a volume loss smaller or greater than 11 to 15%. By the way, if you haven't yet, consider subscribing to the Lumovest YouTube channel so you get all our investment education and stock news videos. A customer survey commissioned by the independent news site Streaming Observer to gauge Netflix subscribers' reaction to the price increase found that 73% of the respondents plan to continue with Netflix, while only 27% of the respondents said they might or they will definitely cancel Netflix. Of this, 24% said they might cancel Netflix, while only 3% said they will definitely cancel Netflix. But here's the thing. Consumers don't like to admit that they'll tolerate price increases in surveys. In other words, there's a phenomenon where consumers respond in surveys that they won't tolerate the price hike and will cancel, but don't really follow through in practice. This would mean that the actual cancellations could be significantly lower than 24%. In fact, it could potentially be even lower than 3%. The last time Netflix raised prices, its subscribers count not only didn't decline, it actually increased by over 10% relative to the prior year, which shows that Netflix has a lot of pricing power. Another way to think about this is to look at what value consumers are getting versus the prices they're paying. Post the price hike, for $9 to $16 per month, which is like 2 to 4 cups of Starbucks coffee, consumers have access to an unparalleled library of TV series, movies, and original content. That's still a pretty good deal for consumers. For these reasons, it's unlikely that Netflix will miss out on 11 to 15% of subscriber volume, which makes the price hike tremendously profitable for Netflix. Granted, we're simplifying this a bit, because subscribers can also downgrade their plans instead of outright canceling it. But this is the general framework that we think through as investors to gauge whether the price hike is good or bad for Netflix profits, which will drive the stock price. What do you think? Do you think it's a plus or a minus for the Netflix stock? Drop us a comment below.